Welcome back to our channel. This year has been hard for Wall Street. We've seen the fastest drop of at least 30% in a bear market and the strongest comeback ever, with the benchmark S&P 500 reaching new highs in less than 5 months. But the coronavirus pandemic and increased market volatility haven't affected one investment, Bitcoin. As of Wednesday evening, October 14th, Bitcoin had gone up just under 60% since the beginning of the year. A real gold Bitcoin was placed in front of a digital chart that showed the price and volume of the currency. Why does Bitcoin did so well in 2020? Why does Bitcoin keep doing better than stocks? One idea is that there isn't enough. Only 21 million Bitcoin tokens can be mined, which makes them more valuable because they are hard to get. The idea of a digital revolution is another reason why Bitcoin has done so well. This means that people who buy Bitcoins think that paper money is no longer useful. This could be true to some extent, since the pandemic showed that physical cash could be a source of harmful germs. As peer-to-peer payment platforms become more popular, Bitcoin may become the best digital currency. Bitcoin also has an advantage because it was the first cryptocurrency to come out. It was the first digital token that investors really liked, and it's also the biggest by a big margin. Its market cap is 5 times that of Ethereum, the second biggest cryptocurrency. If you want to buy a token that isn't as popular as Bitcoin, you can do so on a number of crypto investment platforms today, i.e., anything not named Ethereum or Ripple. Real Bitcoin is being used as bait in a mousetrap. It could be a big mistake to buy Bitcoin. But no matter how good Bitcoin has been for investors in 2020, I think it's a terrible investment. Here are a few reasons why you should stay far away from Bitcoin. 1. Bitcoin isn't all that hard to get. First, Bitcoin is only as scarce as its code tells it to be. Instead of being limited by what can be mined from the earth, like gold, the number of Bitcoin tokens is set by computer code. It's not impossible that, in the future, programmers could decide to raise the number of tokens that can be used with Bitcoin if they get a lot of support from the community. So, Bitcoin gives the impression of being scarce even though it is not. 2. It doesn't work well. The king of cryptocurrencies has a problem with how useful it is. Only 18.51 million Bitcoin tokens are in use at the moment, and a small group of investors hold about 40% of these. Even though there is fractional ownership of tokens, the 10 million to 11 million tokens that are in circulation won't go very far. In 2017, the world's gross domestic product, or GDP, was $81 trillion. About $114 billion to $125 billion worth of Bitcoin tokens are free to move around and are not being held by investors. There's not much use in this. 3. It's easy for people to join. Bitcoin may have the first mover advantage right now, but getting into the cryptocurrency market is very easy. Blockchain is a digital, decentralized ledger that keeps track of transactions. All it takes is time and coding knowledge to make a digital token and connect it to the network. There is nothing about the blockchain that is unique that other businesses couldn't do better. A magnifying glass held up to the balance sheet of a company. 4. There are few, if any, real ways to put a value on Bitcoin. Another thing that people don't like about Bitcoin is that there is no way to measure its worth as an asset. For example, if you want to buy shares in a publicly traded company, you can look at its income statement and balance sheet, read about what's happening in the industry as a whole, and listen to what the management has to say in recent conference calls and presentations. In other words, you can make a decision that is good for you. When it comes to Bitcoin, investors can't get their hands on any hard facts. There are transaction settlement times and the total number of tokens in circulation, but neither of these numbers tells us anything about how much Bitcoin is worth or what it can be used for. 5. Fiat currencies could be used on the blockchain. I also think investors are putting their money in the wrong thing. In the long run, the real value is in blockchain technology. Blockchain can be used to change the way supply chain management is done and speed up payments to other countries. But when people buy Bitcoin, they gain ownership of digital tokens, but they don't gain ownership of the blockchain itself. To build on this point, companies are also testing blockchain that is tied to fiat currencies. In July 2018, MasterCard, MA-1.45%, was given a patent for linking blockchain-based assets to amounts of fiat currency. This means that a made-up digital token might not be needed on blockchain networks at all.